The stock market is literally on steroids. Everyone is now bullish. The bears have officially capitulated. And we're starting to see things we haven't seen since the stock market marked the top in January of 2022. Guys, in today's video, I'm going to discuss how we best navigate this irrational stock market following one of the biggest option expiration in history. Guys, we have a lot of things to discuss in today's video, but before I start, if you do enjoy today's video, please make sure you give it a like. It does help us a lot, guys. And if you are new to our channel, please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning. Now guys, let's start off by discussing the gaps in the real chart of the S&P 500. Last week we finally managed to fill our last gap, sitting at around 4,390, guys. Now we officially have literally no more gaps above, and we have so many gaps below, guys, and this is very unusual. This doesn't happen very often. This normally happens in exuberant moves, in those scenarios where the market moves very quickly into one direction without having the time to digest those moves, and this is very unhealthy, guys. We have a number of gaps below that have to be filled, guys. Remember, gaps, over 90% of gaps, they normally fill with very, very quickly, within a month or so since they were created. And we have so many gaps sitting below, suggesting to us that a pullback is very, very close. And when should we expect this pullback? And that's the big question that we have right now. Well, guys, very importantly, we finally went through one of the biggest option expirations on record. On Friday, we had the quadruple witching event, and we had 4.2 trillion worth of equities expiring on Friday. And actually, guys, we had $2 trillion worth of the S&P 500 options expiring on Friday. We had so many puts, guys. We had so many puts in the system, and because of that, the market just couldn't go down. Now that those options are now finally out of the way, can we expect a pullback? And guys, something very, very interesting that actually happened on Friday is that we've showed you this before, where this is the S&P 500 in red, and is the Fed's balance sheet, where they inject liquidity into the system or they extract it from the system. And we talked about how since the beginning of March, which was down here, and also in May, we had a lot of liquidity injected into the stock market. And this is the reason why we've seen such a crazy rally over the last couple of weeks. Now, guys, on Friday, funny enough, we've had 25 billion, that's not a lot, but we had 25 billion of liquidity extracted out of the system. Hence, we saw that shooting star in the S&P 500, and we'll discuss this more in the analysis section. But this was the first day that we actually started to see some liquidity getting extracted out of the stock market. Now, this, guys, if this carries on over the next couple of weeks, it will put a lot of pressure on the S&P 500. This rally will not be sustained, and is not sustained unless this liquidity keeps being injected into the stock market. And the problem here, guys, is that most of the rally has been sustained by this liquidity injection. It's not normally a sustainable rally should have no liquidity injection, should be just a natural rally where just funds, money are coming into in the stock market from hedge funds and all the other investors. But here is the Fed that is doing all the job, hence that this rally not being as sustainable as other people think it is. Now, guys, just before we go into the analysis section, Let's discuss the news that we have, the economic news that we have this week. And now, guys, this week we have on Monday we have a holiday in the US, so the stock market in the US is closed. And then on Tuesday we have some data. We have the building permits. Shouldn't be market moving. However, on Wednesday we have some very important news that we have to be aware of, guys. So we have, first of all, we have the Fed Chair Powell testifying at 3 o'clock UK time. Be very, very careful, guys. This may create more volatility. So this is on Wednesday, and then on Thursday, guys, we have more of Chair Powell testifying again at 3 o'clock. We have existing home sales, okay, which may also have some sort of impact on the stock market, and we have the initial jobless claim. So this is something to be aware of coming into this week, guys. Be very, very careful. Always be aware of the economic news. Now we need a catalyst to bring the stock market lower. Can be the Fed speaking, can be some of the data that's not so positive, can be inflation coming back in. So anything that can cause a catalyst, be very careful, because that may have a great influence that on the stock market, guys. Now let's start off by looking at the S&P 500, our technical analysis. And here, guys, we have actually very, very extended. Looking at the daily chart here, guys, we are getting into close to overbought territories on the daily time frame. Now, before I start, guys, some of you that have the S&P 500 charts on currency.com, you may have woken up this morning and be like, well, the market is not moving. This is because the currency.com charts have literally been taken out of TradingView. They are no longer there. So guys, if you need to switch your charts, we are using capital.com now, but you can use to any other provider as well. Just make sure you switch your charts over, otherwise you won't be able to see any data from now on. Now, guys, we've discussed this before, but we are actually very, very extended. We are way above the upper expected move for the month, guys. Now, we've seen this in May. In May, right towards the end of the month, price went below. No, sorry, at the beginning of the month, price went below the lower expected move for the month. And guess what? By the end of the month, the price was literally at the upper expected move. So such a crazy move that you had there, guys. Same here. We are now above the upper expected move. Now there is a very high probability the price will pull back down to close at least below, if not further away from the upper expected move. So be very careful here, guys. This is not the time to start buying, not now for sure. Be very, very careful. We are starting to see divergences on higher time frames, which is worrying, okay, with negative divergences, which suggests to us that we may see a pullback in the near future, guys. And here on the daily, on Friday, we've literally tagged our daily IC here, and we've finished the day as a shooting star. Now this, as you guys are aware, this is a reversal type candlestick, and it can bring us lower to where we'll expect this liquidity here to be grabbed here. This will be one of the first targets that we look at. We are also very, very extended, guys, from the moving averages, from the mean reversion, 20 EMA there. So a pullback back down to at least this IC will not be unexpected over the next coming week or so, guys. Okay, for sure, that would be very expected. Next, we get the Apple here. Now, guys, Apple has been on a monster run, and we are now getting divergences, negative divergences on the daily. We are at all-time highs. We are in uncharted territories, and a pullback is very much, to be expected here. Now, can this go higher? Yes, it can. If we don't go down, guys, okay, over the next couple of weeks, so if this carries on going higher, when can this go down? Well, earnings season will start from the 1st of July. So most probably when the results come in, because the valuations of Apple are way overextended now, seeing that they won't be able to meet their valuations in terms of their earning results, then they will be able to, most probably will go down. We may have such a quite a sizable pullback there, guys. Now we are getting very close to actually being overbought on the weekly here, guys. What happened the last time we were overbought on the weekly? We had a crazy, okay, so when was that? In December of 2021, just before the massive crash that we had in 2022. Guys, we are exactly at the same levels here. However, this time around is different. Why is it different? Well, this time around we have interest rates at 5% and we have QT, quantitative tightening, Fed extracting liquidity out of the system. There's so much going on, guys. Here, remember, back in here we had interest rates at 0% and we had QE, we had quantitative easing. So it made sense for price to go up higher, and we've discussed this a lot of times in why did the price went up higher back then. Now guys, this is very dangerous here, very dangerous. It's not just about technical analysis, this is also about fundamental analysis. So this can go, if it does, if any catalyst comes in the near future, guys, this will just drop like a rock here. Okay, so be very careful. This is not the time to be buying up here. Okay, next we get the UK 100, and guys, the UK 100 has literally not moved at all, okay, for the last couple of weeks. Literally been in a sideways consolidation here, and we've just managed to break above the inverse head and shoulders here, and as long as we're able to not close below this low, then it would make sense for price to push back higher to clear some sort of some liquidity from up here and up here as well. So a push up higher would be expected as long as we can not close below this level here. If we do close below, the inverse head and shoulders is invalidated, and we'll definitely most probably will go lower from there. Next we get the DAX here. Now the DAX was managed to get us negative divergences on the weekly, which is very powerful, guys. We are at all-time highs, and again a pullback should be expected in the near future, guys. Again, we are on uncharted territories here, but we are going higher here on less momentum, so it does suggest that something is happening just around the corner. It can just be the liquidity being injected here, and that's it. Okay, no one else is buying apart from the Fed inducting liquidity into the system there. We are getting very extended here, guys. Now be very careful. Don't just sell just because of the sake of it. If you want to be, we have to be tactical here. We have to look at some sort of break of structure. Looking at this chart here, guys, this looks very bullish. So unless we see a close below and then a comeback into some sort of IC there, okay, that's what we want to look out to be more bearish longer term. Intraday, guys, you use our scalping strategies. You can buy or sell either direction. Okay, we've done that in the course, and you should be a master at it as of now. Okay, or by now, I should say. Next we get the Dow Jones here, and guys, we've managed to actually on here clear the liquidity on Friday, and immediately as we cleared the daily liquidity, we've seen an instant reversal again, a shooting star candle there, guys. Now this again looks very bullish. I would expect us to see some sort of pullback soon, but guys, be very careful here, because we are starting to see negative divergences on a higher time frame here on the 8-hour chart, and a pullback here would make sense. Now it would make sense to this 8-hour IC. If we do close below this 8-hour IC, then at that point we'll have a break of structure, and we expect price to come into our trend line. If price moves below the trend line, then we'll expect to see some sort of break, a retest, and we load up on more sell positions at the retest, and then hopefully we go even lower there to clear up some of this daily liquidity sitting below this level here. Now guys, if we do go up higher, okay, there's a possibility we do go up higher, Fed injecting even more liquidity this week. That's also a possibility. Where can we go to this daily liquidity, guys? Here sitting at around 35,500, guys. Okay, so there's also possibility for price to go there. I would expect to see a pullback before that happens. However, the Dow Jones, the US 30, guys, has actually been underperforming the US 500 and the US 100, so it would make sense for the rotation trade for people to move into banks. Okay, to start buying more banks, because the banks have been the beaten sector this year, so it would make sense for them to do that. And if it does, then it will definitely go up higher, so be very careful on that, guys. Next we get the US 100, and guys, here we are very extended again. We're very close to being overbought here on the weekly time frame, guys. The last time this happened, we had the COVID crash, and every single time it came to these overbought territories, we've had a pullback, guys. Okay, now be very careful here. What happened on Friday? We managed to clear that liquidity just about, and we are looking for now, hopefully, or perhaps to go lower. We are going higher on negative divergences. So there's so many things, guys, giving us the signal that this rally is not sustainable. Now, what is my target, guys? My target is literally this low here for now, sitting at around 14,240 or so. 230 or so. Now guys, this low here, this liquidity area looks very clean, so it does make sense for them to grab this, at least grab this before they may wish to go higher, okay, at that point. But this looks very clean, so that would make sense. As of now, we've seen the market going higher on negative divergences, not sustainable. However, this looks very bullish, so we want to see some sort of break of structure, price coming and closing, okay, below a major area, a major level, before we can turn full bearish, guys. But as of now, you know, loading up tactically on sell positions does make sense. Again, remember, guys, today on Monday the stock market is closed, so there's not a lot going on there. Okay, we may go down just because there's no liquidity, there's no liquidity into the system. But as of Tuesday, be tactical with those moves. Next we get the VIX, and guys, the VIX hasn't been this low since the big crash, the big COVID crash in 2020, just before a major spike in the VIX. Watch out tomorrow just to see if the VIX opens up with a big gap, because if it does open up with a big gap like it did down here in February of 2020, we may get, okay, this was the first move, and then we had that big spike, okay, in the VIX. Now remember, guys, back here COVID was already, you know, that was already well known by then. Okay, so there wasn't like, oh, there's something new. As it got more serious, okay, people started to have more fear, hence we had that massive spike in the VIX. Same here, we are having a couple of events happening now, nothing serious. If those events are starting to become even more serious, okay, then you get a spike, that fear coming back into the market. As it stands, there is no fear in the market, which in its sense, it should say, or maybe we should be fearful a bit, okay, because at this point there's so many things, fundamental things going on that people are not taking into account, which is very worrying, guys. Next we get to the DXY here, and guys, the DXY had a move lower. Okay, the next target we have is this daily IC. We're looking at this daily IC for it to hold. If it doesn't hold, then we may be going a lot lower. Now those highs here that the DXY has left out, these are very clean, so a move up higher just to clear the liquidity here, it would totally make sense. And then if we are able to hold above here, then we're definitely going for this this and that liquidity there, guys, for sure. As it stands, okay, not a lot has gone on with the dollar, perhaps because of the liquidity injection that we had last week as well. As we are getting that out of the system, we may start to see the dollar move up higher. Next, we have gold here. Now, gold has actually made a move lower last week, almost to our target, guys. It didn't actually go to our daily IC here. This does look bearish, okay. Also, price is finding resistance at the 20 and the 50 EMA here, and we've seen that it's acting as some strong support in the past. So as long as price is able to hold below those, then we are going lower. If we do see a break above the 20 and the 50 and a close above, then that could potentially create a leg higher here to new highs. So those are the things I'm watching, guys. If we do go up lower, watch this daily IC, and if that doesn't hold, then we may be going to this daily IC there, okay, to try to clear up some more liquidity there, especially if the dollar does get a move higher. Next, guys, we get Bitcoin here, and Bitcoin, as we predicted here in the past, we were expecting a move lower. We had that move lower. I was expecting it to go even lower to touch the body of this IC. That didn't happen. However, it left this clean liquidity area here, guys. This is very clean here, and this just tells me that they will see at least a move lower here to try to clean that and come into this daily IC. That would be the first target, guys. This is creating lower lows and lower highs, lower lows and lower highs. So for now, this looks very bearish unless we see some sort of break of structure to the upside, guys. Again, with the NASDAQ pulling back lower in the next couple of weeks as expected, then I would expect Bitcoin to come down with it, okay, unless we see a rotation where people are taking the money out of equities, out of indices, and are pulling that in cryptocurrencies, okay. That is also a possibility. Don't rule that out. As of now, this looks bearish. That's pretty much it for me, guys. Thank you very much for watching. If you want to learn more about the strategies that we use, or would like to learn or like to join our Discord, a free Discord channel, then head over to our website, mcitradingacademy.co.uk. Thank you very much, guys, and I hope you have a great trading week there.